Trader at TechTrader.com. It's Saturday morning, April the 20th. Following an eventful week and a period in which saw the S&P go down 6 days in a row. Folks, I tracked it. It's 4 years since the S&P's been down for 4 days in a row. We had a couple 5 days, but 4 years, way back here when the market got hammered back, that we were down as much as 6 days in a row. Short term, we're not exactly oversold. We got oversold, but I got to tell you that with a lower market on the S&P and NDX and technicals holding up as well as they did, it may be signaling that a reversal is imminent, but we don't know whether it's going to be nothing more than a technical bounce. Now, for now, the resistance on the S&P is right there. 507, 580 in that zone right there. If you get above that, it's 51, 15, 20, where the moving averages are crossing over. But if we do get a bounce, it could be just leg 1 and 2 before we get a 3, 4, 5 like we did here. 1, 2, 3, 4, 5. Now looking back at the overall pattern, if this is a massive move and we're going to have one more leg up, which is still possible, this is a 1, 2, 3, 4, and this is wave 5. But I'm looking at it as 1, 2, 3, 4. Excuse me. This could be 1, 2, 3, 4, 5. Well, that's wave 1. This is 2, and this is 3. Which means if this is the fourth wave down, and we get somewhere down there, 47, 40, 47, 4800, or even worse, 45, 4600, on a really steep sell-off, we may get one short, strong bounce. What I prefer to see is something more normal like this and orderly decline, and then run up into the 53.5, 54 zone, which is my target. But right now, you can see the action is near support, near the trend line as well, internal trend line on a long-term basis. If you connect these lows internally here, we do have some support in this zone. That's the S&P. Here's the NASDAQ 100. Looking even worse, although it wasn't down 6 days in a row, it was down 5 out of 6 days. There was one little blip day there, maybe still probably as close to being down 6 days in a row as we've seen in a while. It's at a secondary support level. The trend line and third level of support, it comes in around 16, 6, 6.5. If we get a plunge on Monday and then reverse, that would be the place where I'd be more aggressive on the long side. But I'm warning everybody that this could be just leg 1 at the beginning of a major bear market. I don't know if that's going to be the case, and you never know until it unfolds. But for now, we'll take a look at the indices. And note this, by the way, the IWM, which was weaker for a long time, actually was up on Friday by almost 0.5%. And the transportation index was up almost 1%. Not that it's that meaningful until the transportation get back above there, but you can see that after 5 or 6 months of consolidation, it looked like it might break out. We rolled over on transportation, and the next downside target has to be around 14.7, or about 300 points lower. Again, back to the IWM. After a nasty decline, which saw the small caps in transportation lead the markets lower, they finally reversed on Friday ahead of the NDX and S&P. Whether that's meaningful, we're not so sure. I will say the support is about 188. We're at 193 now on the IWM. What about the underlying technicals? On the call and offside, it got down to a real steep negative 225, a number we haven't seen since August of last year. It reached minus 287. Every time we had to move down in this zone here, we've had a substantial bounce within 1 or 2 days. So either we come down and retest and then go, or we just take off on Monday morning, which is possible since we're at that condition. Note the positive divergence in the oscillators while the markets were going lower. Always a good sign. Percentage of stocks above their 40 jumped from about 20 to 30%, 29%. Not a big deal yet, meaning that only about a quarter of stocks are above their 40, which is reasonable when you saw the kind of decline we had. Big jump in the VIX, but not huge, and it only got back to resistance. Declining tops line, lateral price resistance zone. If it gets through here, we're looking at 30. If that happens, look at UVIX, UVXY, they could explode but I'm looking for maybe a pop and then a pullback. It's a hard call, but this is right at resistance as well. So now look at the components. Apple. Why I'm concerned about the market, obviously, is we've had a big 1, 2, 3, 4, 5 wave decline. If that's the way you look at it, I could also count it as 1, 2, and then 3, 4. This is the fifth wave starting, and it may not be done. And if the market continues lower, we might see Apple test between 159 and 160, 61 there. That wouldn't surprise me if we got that early in the week. Amazon really started to roll over last week after making nominal new of 52-week highs, multi-year highs at 180 and just short of 190. It's come down to 173, lost 17 points, and it was down every day last week. As a matter of fact, it's been down 6 days in a row as well, and coming near support. But for the first time in a long time, way back to here, since October, first time Amazon's closed below the 50. If we get a bounce, it's weak, that may be a short. Google held up better and was only down 3 of the 5 days. But Friday got whacked for 280. Not terrible. It's just a small percentage move, but you can see it's right on support, right on the trend line. Further damage could lead to 148. That's 6 points lower. If we get one of those selling climaxes, I can see that. What about Microsoft? Microsoft really plunged last week from 429.30 to under 400. And it's right on support across these double bottoms in here. You can see the trend line's been broken, and this goes back a year and a half. So are we obviously concerned about Microsoft being the downside leader? Now, if it bounces up towards 414.16 and does it with weak volume, it starts to roll over, that could be a short. Or any of these stocks could be interesting opportunities to buy some puts on them. NVIDIA, the market leader. And this is why the market got hammered. Take a look at Friday. Down 87 points or 10%. That's a big hit for that kind of stock. And it did it on almost record volume. 90 million shares, breaking a top pattern. It looks like a couple tops in here. It's definitely a rollover and closed way below the 50. The 50 is now at 840. It closed 759. We're talking 80 points below the 50-day moving area on NVIDIA. Not good. If you think that's bad, I'm just going to show you SMCI. Clobbered 218 points, or 23%, in one day on Friday, and that broke. So those kind of bull market phase leaders breaking like that are very ominous signs. You see SMCI run back to 8.25 or something like that, maybe 100 points or not or less, or maybe backs and fills of flags in this area. I wouldn't be shocked to see 400 or 500. And Netflix, big leader to the downside with a great earnings report, but they sold it. They sold it big time, down 59 points, a drop of nearly 10% as well. And so NVIDIA and Netflix down 10% in one day, pretty amazing stuff. Look where it closed, right on support. Any further damage, you have the gap support at 537, which would be your next logical target, 14 more points. But I got a feeling if you see an opening spike down on Monday on any of these, including Netflix, and it gets down there 540 or less, might be a buy for a snapback. Again, any of these might be interesting option plays as well from an oversold condition. Meta, which had been a monster and really doing well, dropped 24 points or almost 5%. And this one's right on support, and it closed below the 50 for the first time in a long time. So I'm going to say also that the 2 layers of support are right about where it closed, and then you have this big gap. Right about 450, 355. So you got about 25-point buffer. We'll have to see what that does. Pretty amazing stuff. By the way, look at this. The major trend line going back a year and a half is right about where it closed. So this is double support. If they break it, they could, take some stops out and really whack this thing. So Meta is vulnerable. And Tesla, I'm telling you, for 2 months it looked like a dog. When it rolled over here and formed that bear wedge to resistance, filled out the gap, and then rolled over, formed the bear wedge again, and rolled over. I mean, this thing's down 6 days in a row as well. And right now, if we get a market fall through to the downside, I'm expecting Tesla to test 135. Wow. That's basically cut in half from 300, more than that. It's already in half. Now, we get to that zone, there's a lot of room to fall, all the way down to test the multi-year lows of 104.5. Now, I'm not saying that's going to happen. I'm just saying you don't want to be taking out this next key level in the 135 range, because could cause a panic in Tesla alone. All right, so that's it from the market leaders. It's not a pretty sight, but they are oversold. I'll give you that. Now, some of the major ETFs we follow, the SMH, which has led the market up, is certainly leading it down. Take a look at this coil. Remember, I always tell you that the higher up in the pattern, a bull coil, a bull flag, or any of these consolidation patterns that are normally continuation patterns, the higher up in the pattern, the more vulnerable they are. And in the case of these, where they're like two out of three, 2 out of 3, 2 out of 3. And then this would be only 1 out of 2 in terms of odds of breaking out to the upside. Instead, roll over Beethoven, and you can see right now this key support is 193.4 or 198. So again, there could be some downside follow through in a lot of these stocks, but if there's a steep oversold spike down on Monday morning, you get a little mini panic, it's going to be an opportunity, I think. We'll just have to see what develops. SMH is one, and the XBI is the other. And XBI has been leading the market lower for, get this, 2 months. Yeah, this thing hit its high February 8th. Here we are 6 weeks later, 2.5 months later, and it dropped down to 81. It lost about 20-25% already, and it's below support. Secondary support is right there. So this could get a bounce too. But you can certainly see that compared to the SMH, this has been rolling over for a longer time and leading the market lower. And believe it or not, the financials are now trying to lead the market higher. Look what it did on Friday, up 4.2%. As banks rallied on earnings reports, and you look at the leader was WFC making new highs here, and several others. But Wells Fargo doing great. All right, so that's it for the indices, the underlying technicals, the NASDAQ 100 generals, and some of the major ETFs we follow, but there's a few others we should look at. What's going on with gold? Well, the GDX has been holding. You can see we've had a 1, 2, 3, 4. So theoretically, I'd be looking for this to extend into the high 30s. That's GDX, and any of the others, GDXU is another similar, and GDXJ, the junior goals, very similar. All of them look pretty good. Many gold stocks you'll be seeing today. I also want to cover the other ETFs that we follow closely, and that's NUGT and JNUG. Same kind of pattern, 1, 2, 3, 4, fifth wave target, 50. That's 10 points or more in NUGT. JNUG. They're all the same, folks. In essence, it's telling you there's a new bull phase in gold. My buddy Avi believes it may be the beginning of a generational move, which could get gold to, 3,000, something like that. All right, so there's JNUG and NUGT. Now, what about silver? AGQ, we follow closely. Also breaking out of a base with a 1, 2, 3, 4, fifth wave target, 47. 9 points. We'll get to some of the stocks in that group later on. SLV is the same, another ETF. They all look alike. All of them with bases breaking out in the wave 4 consolidations. That brings me to going over a bunch of longs I want you to see. Now, ACB, interesting, in the marijuana group, had a 1, 2, 3, 4, 5 wave move and now pulling back. So in essence, it's a 1, 2. Should it break out of this? The target is going to be 11, believe it or not. It's only 630. Keep an eye on that one. As long as we're there, we'll cover CGC. We've had a monster move. It went from 2 3/4 to 1137. Now, any way you look at it, it's like 350%. Orderly retrace and bounce. Keep an eye on that one. It held support. The measured move is way up here in the 15 range. That could be a huge swing. So we'll see. A few biotechs that are still holding up well are ADCT. Look at that coil. As long as it holds and breaks out, what you want to look for is a move over a 540 with volume that could get this in a 7-8 range. ADMA is another beautiful coil developing as long as it doesn't break underneath 585. The stock could run to 7 and 8. In the gold sector, Agnico Eagle, fabulous pattern. We got a beautiful base. It's now the highest level we've seen since about a year and a half, almost 2 years. Your next target is 67. Software stock AEYE, beautiful base. Breakout, pop flag, pop another falling wedge. Unless this market completely falls apart, this stock could be an $18, $19 stock. Keep an eye on it. AGX, engineering construction, explosive breakaway, and now a flag. Looks like this could be 60 or even 70. Sorry, high 60s or low 70s. Watching ALT is broken, but I wanted you to see this. It's oversold. It's had secondary support. Don't anticipate anything that's in a downtrend until you get a reversal. APP, breakout, swing trade. It made both of our targets. Now it's pulled back to support. Must be stopped under 64. AQST, Aquestive. Nice base, breakout, strong move, and then a pullback falling wedge. It tried to pop, and it did on Thursday. There was no follow through. So we're waiting to see if this stock has enough energy to get to 4.5 with volume. Then your targets are 6.5. ARQ, rising channel, accelerated with volume, and now another rising channel, but had a pretty negative engulfing reversal day on Friday, so be careful with that one. AU in the gold sector, HB likes this, my favorite gold. Beautiful base, breakout, retest of perfect retest, pop to my target, and then a pullback wedge. If this is a 1, 2, 3, and this is 4, then 5 gets me to about 30, 29.5, 30. ABDL in the biotech sector pops out of a flag last week and pulls back, but boy, in the midst of a lousy market, good action as it crosses quadruple tops and goes into multi-year, if not all-time highs. Target 25. Bally's, this is a beautiful base, V-bottom, right-handed extension, pop flag. Long-term declining tops line, broken. Flag developing. It's really amazing how this gaming stock is developing this pattern in a lousy market. Folks, I always want to point out that relative strength, stocks that are acting well in a lousy market, usually are the ones that act great when the market turns around. Put that on your watch list. BAND, B-A-N-D, broke out of a base with a major breakaway gap, and for the last 5 weeks, it's been in a falling wedge. Something to watch, especially if it gets over 18.25 with volume. BLBD, although it's pulled back to support, trend line, and moving average support, it's doing it in a beautiful rising channel. I can project a retest of the highs at 39 and then mid-40s, but I also would say I would stop under last week's low. BNTC, look at that pop Thursday and inside day Friday. Looks like a breakout to me. And this junior biotech breaking out of a base augurs well for a move to near 12. CADL exploded 2.5 weeks ago and it's pulled back in a nice orderly fashion. You can see the coil that's developed. It's right at the apex of the wedge, I should say. And something to watch because if it breaks out with volume, it could fly first to 8 and then to 12. CCJ. Well, the biggest purveyor of uranium, Cameco, has been in a phenomenal uptrend for 4 years now, taking it from under 5 to near 50, tenfold. And after pulling back, actually not near 50, it reached 52.64. Now this could be a little mini head and shoulders. You got to be careful, but I don't think so until and if it breaks underneath 46 6, that's where I stop it. The target is 56. Seco Environmental, what a beautiful long-term chart. It actually spiked off the moving average on Friday and jumped to $1.45 or 6.5%. Talk about relative strength. But there is a triple top up near 24.5, which you got to get to. And if you do, 28 is your target. Looking at CGC, we mentioned it earlier, you see the positive pattern. CLSK in the Bitcoin realm, probably the strongest one. I've been watching Mara and Riot nowhere near what but CLSK is doing. And notice the multiple bottoms that held, the trend line held, the stock popped to the moving averages. We get through here, this is a rock and roll to at least 21 and maybe 24. Koya, I'm a little concerned because it had an engulfing reversal day on Friday, but it's a very thinly traded stock. It is near or on the major trend line. I consider this a large 1, 2, 3, 4. I'm still looking for 14, 15 in immediate to long term. See Coupang, phenomenal relative strength. Take a look at the way it ran up the week before last and early last week before the pullback. But net it's a 1, 2, 3. And if it consolidates for another week or two without breaking down, high 20s target, 27 or so. CBRP with a pop coil and then another pop and a longer coil. If this is a 1, 2, 3, 4, then I'm looking for one more wave or takeover or whatever. It could take this to 60 plus. Keep an eye on CRBP. Cardiff exploded and now it's finally pulled back to test support. I just don't want it underneath right about where it is. Under 4 would be an out for me. Target of 6.75 and 7.75. CRNT in a really nice rising channel has pulled back under support, under the moving average, and at the trend line. It did bounce on Friday, but I'm concerned. I love the long-term possibilities, but it may be a while down the road before this can get up towards near 4. CRS, a steel stock Carpenter, used to be called Carpenter Steel. Beautiful rising channel with a target now of, that's right, 100. Criteo, a breakout in February, a nice little wedge, a pop and a coil. This is a tech trader swing. And then made it up to my target and stalled. And then pulled back to test the trend line of moving average and held it. And had a nominal breakout on Friday in the midst of a lousy market. Relative strength. Target 39. CXAI, peaking chart, this one, good luck. It's all over the place. Spike, spike, spike. Falling wedge, falling wedge, falling wedge. I don't know what to tell you other than it's at support. It needs to hold here or it's dead to me. Dell, great swing that lasted from September in the high 60s to 136. So more than doubled, but the pullback's underway and you don't want it underneath price and moving average support. Comes in around 108. DJT had a nice comeback last week, but it's kind of got slammed after exploding all the way up to the almost 80 range. They dropped in the low 20s fast, like 3 weeks. But this week was a good week for it as it rebounded from the 22.5 range to tag 37.5, 15 points. At resistance here, but your targets would be 42 and 48 if it continues. DKNG, well, it's been a swing of mine since back here when it broke out. It's done very well over an immediate term. It does appear to be broken, and the trend line's broken on an engulfing reversal. If you're still in it, keep a stop underneath here. I don't want this under 40. That's my takeout. It's right there. DRS, aerospace, beautiful chart. Continues to consolidate, but a very negative reversal down Friday has me thinking keep your stops in place under 20. EDU, beautiful long-term educational stock from China. Currently consolidating and kind of a flag, but you have to put a stop under last week's low. Under 83.5 out. That's tight. Careful. In the gold sector, Eldorado EGO, beautiful run and now flagging. Long-term picture. You can see the major 6-year base. We break out of this, we can very easily see a run towards there. Let's put this target around mid-20s. EGY, another, this is in the oil and gas sector, breaks out of its base, runs the resistance and backs off. I still like the look of this, particularly if oil goes higher, for a move possibly into double digits. EJH popped early last week and pulled back, held up very well. Don't know what's going on with this, but I want to show you the possibilities. If it breaks out, you might see 6 or 7. ET in the oil sector. Oil stocks have been quite strong of late. Look at this angle of said. It won't quit. My target is 22 eventually. EBER, beautiful rising channel. It pulled back from resistance this week, but my target is 22 and 26 if it continues. FCX in the copper sector, consolidating in a wedge here. We got double top resistance at around 52.5. You get through that, you're looking at 56.7. Finger wedge forming. Possibilities are if it holds 287 without falling apart, we might see 4 1/4 or even 5 3/4. FSM in the silver sector. It says gold, but it's really Fortuna. It says silver mines, and yeah, it says gold. Okay, anyway. Big multiple tops breakout. And a nice little pennant is formed here. I want to show that to you. And wave 4, 1, 2, 3, 4. We get another wave. My target is close to 5.5, maybe 6. FTAI, what a strong stock, but it has pulled back. Nevertheless, if this momentum continues, we're looking at near 80. Support 64. GCT has had a huge run this year from 5 to high 40s. Let's just say it went up 8-fold from 5 to 45. Pull back, it's flagging now. Should it break out? Mid 40s and low 50s are potentials. We showed you GDX, GDXJ, and GDXU earlier. GEO, a tech trader swing since it was in October when it was 7 3/4, doubled to 1631 and backed off. Key support now 13 3/4. Target 17. GNK. Well, in the shipping group, several stocks have held up very well. Note the flag here while the market pulls back. Also, solid relative strength. But you probably need to really keep a stop under 19. Gets through here, we're looking at 22.5, 3, and 25. Go to. Beautiful base. There's a massive breakout. A big volume. And look at this 6-week consolidation. Now, Friday, it tried to pop. And it was up on a down day. Oh, I'm sorry, that was Thursday. Friday was an inside day. Just keep an eye on this one. Should it get above 6 3/4, it could run to 7 and 8. 7.5, 8.5. HMY, a little junior gold and silver stock, Harmony. Beautiful chart, but it is at the top of the long range channel. On a weekly basis, this is the highest level we've seen in 11 years. So there's a possibility this may make it into the high teens. Heritage Insurance has been a phenomenal chart ever since the November low at $1.12. It has gone up tenfold and reached 11.23, exactly tenfold. The extension target now, how about 17? IAG, another gold stock, a large inverse head and shoulders at the neckline, could explode into the 5-6 range. INDO, very powerful stock when it moves. It has gone sharply in 3 days from a little over 2 to more than 6.5. Extension target tells me if it gets through here, you're looking at 8 3/4 and 11. Iovance could have a problem here, folks. It's pulled way back. It's taking the trend line out. It's at support. Nothing to do here until it snaps back over 13. If so, then your target's 17 and 21. JNUG with a big pop in the February period. Coil breakout. Look at this little pennant or flag. Nice. We can get to the double top. You may be looking at 70 or 80. Probably a takeover. We showed you JNUG and NUGT earlier. KOLD. This is the bear ETF for nat gas. Squeeze to the apex on a 1, 2, 3 wave 4 coil. You can see how much this can go up, like double from where it is. If nat gas gets hammered, this thing could fly. It's leveraged. LBPH exploded, as you know, in January. It's been going nowhere and coiling for months. on support, but keep an eye on this one for a move over 23. LFMD, flagging in a range above resistance in a beautiful rising channel with a target of 16. MAX, now media alpha breaking out of a base and then forming a flag is always a good thing. Keep in mind support at 17 and resistance at 23. MCY, another one of those insurance companies that have just flown, 27 to 54, 55, and consolidating. Target 60. Meso exploded and it's pulled back to support. Whether it goes anywhere from here, I'm not sure, but under 480 is a stop. The target is 7.5 and 9.5. Swing trade ML is pulled back, I think, to a key trendline support area and not far from the moving average too. It's vulnerable, it's thin, and it allows the market to get hammered, but it might be due for a snapback, high 80s. MNDR, recent IPO, best looked at on an hourly chart. Pop coil and another pop, and another pullback on Friday. Can't tell you what it's going to do because look at the way it pulled back, but it had a big run. Let's see if it holds support or not. MNMD spiked up after running and now ran up to a new high before backing off. It's right on support here. I would say you'd have to put a stop under the 50-day, which means under 7.5 out. MP popped out. We put a swing on it. Now it's wedging. I'm not as keen on it as I want it to be because of the lack of technicals, but you can see the moving average is crossing over as bullish. The stop is only 15.25. mRNA, I was a little ahead of myself in this one. I mentioned it the day I did it. It got right to resistance. It looked like it was going to blow through. I put a swing on it, immediately died, and is now stopped out. We'll revisit later. Nutanix. Unfortunately, on Friday, I saw this go under support. It's now, for the first time all year, under the 50-day, under the 10, 21, and 50-day moving averages, and now under price support. And it closed there. It's a little oversold short term, but I'm concerned it goes lower. It's a tech stock. ORN, nice little junior engineering construction company, has had a 1, 2, 3 wave, 4 is underway, 5th wave. Target is 11. Oscar looks like a little rounding bottom and a breakout. The challenge is to get it over the multi-year highs at 18.5. You do that, you're looking at 2021. Pan American Silver we showed you earlier. PAYS, what nice relative strength on this one. Breaking out of a base and then pulling back and wedging. I don't know how far they take it, but I can tell you this. The measure move right now is 5.25 and then 7. Impinge, a tech trader swing since back here when it broke out in the high 50s, made it to 130 some odd, I think. 132, but that was 6 weeks ago and it's been coiling. Now still above the moving averages and trend line, but it's right there. Any further damage under 115, out. If it does go again, retest 130 or better, and then we'll look to see where it goes beyond that. Palantir, I've been telling you for 2 weeks I'm concerned. Well, you can see a rollover. It's now underneath lateral price support and near a test of the gap right there, which I think you may see early Monday. Under 19.5, sayonara. Prime Water, in the midst of all of this, this water company breaks out of a base, pulls back and goes again. And look at that. Up 4 days in a row in a lousy market. Kind of like that relative strength. Rev Group breaks out of a base, platforms, wedges, does it again, hits the top of the channel, backs off. Long-term pattern shows its highest level since 2018. It's 6-year high. The target is 30. RNA, which has been a swing of ours since I think it was 10 or 11, made it up to 27, one of our better swings. Came down and bounced, and now I'm concerned. I'm concerned that this is a left shoulder, hand, and right shoulder, or rounding top, or whatever you want to call it. 100% stop for me would be under 21.5. Your targets are 27 and 30 if it does go higher. Root, maybe chart of the year, went from 6 to 86. But the last 2 weeks hasn't been good for it. 86 to 51, below support, below the trend line. last support and target is 38.40. Starbulk, beautiful rising channel out of a base. It looks like to me it could be a 1, 2, 3, 4, 5, but I think it's a 1, 2, 3, 4, and it has more to go. Shippers have been strong of late. Your target's 27.8. SCCO in the copper group breaks out of a big base and just keeps running. It pulled back last week, so you'd have to put a stop underneath 108, but I'm looking for 125. SFM, big pop on Friday. Sprouts Family Markets, Farmers Market, excuse me. Beautiful flag pattern, all-time highs. SLDB, broke its channel, broke its moving averages, is at secondary support, 100% stop under Friday's low. SLB we showed you earlier. SOSX, I'm going to show you some of the ultra short ETFs that are popping out. Not a good sign when the ultra short semiconductors pop out of its downtrend across moving averages and lateral price support. Next targets are mid-50s. SQQQ, same with a target of 15. SSNT, pop wedge, pop again, and then a large coil. It broke out, but it pulled right back to it. Keep an eye on this one. It's very thin. SDNG in the shipping group, 1, 2, 3, 4. Possible fifth wave extension could get you to mid-80s. That should be interesting. Tight stop. STLK breaks out of a base, pulls back and tests, and then it rockets. Now a falling wedge. Something to watch if it should pop out. STTK exploded with a breakaway gap, formed a wedge. We went long and then ran to the target. But for the last 3 months, it's been going sideways and coiling. Nothing to do here until it breaks out over 11. Smith & Wesson, SWBI, B bottom, right end of the extension. This is a 1, 2, this is 3, 4, 5. Even though it's consolidating, it's the fifth wave consolidation. It's less reliable. Be careful, but if it does go, your target's 19. TAL, Chinese educational stock, pull back falling wedge to the trend line. The stop would be under 10, 10 and a quarter. The target is 15 and 18. TALK had a nasty little pullback. I still like this company. Nice rebound on Friday out of nowhere, 34 cents or 11%. That's the stop. You cannot be in this stock under 290. Targeting 385 and 485. Technoglass, boy, all-time highs in the middle of a lousy market. Finally gave back a little bit. It's on support. Vista, look at this long-term chart. And with this consolidation, it now measures 48. Stop would be under Friday's low. I'd keep a stop under 40. VITL breaks out of a base, flags near resistance, and it's really accelerated nicely. This one's gone from under 10 to mid-20s. And you can see that's not an all-time high, but the target might be high 20s. Wave out of nowhere exploded. Now it's wedging, something to keep an eye on. It's pretty thin, but it can scoot. My target is 7. I showed you Wells Fargo, phenomenal chart for this banking stock. It's the highest level on Wells Fargo since its all-time high in 2017. It reached 66 and change. Friday's high was 60. 85, so I guess you have a little bit of room to run. Nice chart. WISA exploded and pulled back, just something to keep your eye on. It's very volatile. It literally went from $1.66 in 2 days to $10.95. So anytime you do that and you get a nice fib retracement, you always have to watch for it. And then watch for a move over 8.5, 65, and then maybe you're on your way to mid-teens. WPM, we told you that's wheat and precious metals, silver purveyor, the biggest in the world. YMAB, beautiful run up. Took this one from under 5 to over 20. And now a beautiful bull coil. On Friday, it peeked its head out. Something to watch. Good relative strength for YMAB. And folks, that's it for longs. I got some shorts to talk to you about. And then we'll call it good for today. We'll start off with Adobe. Well, I noted when Adobe broke that it had a bear flag. That broke, and now falling wedge. I don't know how far down that this can go, but I wouldn't be shocked to see it 4.25 or even 375. Autodesk, we gave you a swing short on it when it was 250. It dropped to 206. 45 points. and bounced on Friday, but it may be setting up for even lower levels towards 190. AKAM drop down, rising pattern. That would be a bear flag right there. That bear flag failed. It rolled over to test and bounce and then took a header. It's at support here. Further damage could get you at 88.90. AMN in a nasty downtrend following a massive top. This snap back to resistance was the ideal shorting place. And then came down from the bear wedge. It feels much lower. I would not be shocked if this stock made a move towards low 40s. AMR. From the top, plunged and from the bear flag. If they take that out, we're looking for 265 and 210. ANET, hard drop. Now, it may not be an ideal short here. I would look for a bounce. You get a weak one, the rollover could take you down towards 220. ARM, we mentioned it last week. It plunged right out of that coil and dropped from 130 quickly to 85 and change. Needs to bounce in here, maybe fill the gap first, but boy, that is oversold short term. ASML, another semiconductor that broke hard. Look for a bounce back, flag, wedge, whatever, and then maybe we short it or move back down towards 700-800 range. ATGE ran up to resistance and rolled over. Overall pattern is pretty ugly. I would look for 42 and 35. BRZE broke down. I showed you the bear flag. It then broke the flag. It tested first target by reaching 38.5 on Friday. Eventually, 35 target. CAR, nasty top, bear wedge, broke down, rising wedge. Now I'm looking for 78.9 and 68.9. CCK, head and shoulder top breakdown, rising wedge right to the neckline. If it fails here, we're looking for a move into the mid-60s. Actually, the chart should look like this. There. CEIX looks like a head and shoulder top, snap back to the neckline, forming a wedge, and a nasty engulfing day on Friday. Tells me this is not done on the downside. I'm looking for 75 and 68. The CMT, large bear coil or flag, but it's a little too strong for me. I'm going to pass it for now. Cohr rolled over from the top to the first target zone. Watch for a snapback and then a failure. Carvana on life support. It rolled down underneath the moving averages for 4-day flag here, but it's still above the major trend line. If they break this one, I'm looking for high 50s. Deckers broke a top from the bear coil and dropped out of that. Wow. I mean, this stock is very vulnerable for 50 to 100 points. ELF was a tech trader swing short. It cracked on Friday. Looking for 140, 144 and 133. FN breaking its support, targeting 145 and 135. Fox Factory was a tech trader swing short in its high 60s. It dropped down a bear flag and it's dropped down again. And the next target is 35. GitLab, I added that this weekend. It looks like a head and shoulders. It broke the neckline. It's slipping hard. My target, 40.41. INMD finally broke his flag, snapped back, and then rolled over. Eventual target is 12. LITE, tech trader swing short, broke down. It is that first target. Second target and third target, 38 and 35.5. MRVL, head and shoulder top. We just added this as well. If it cracks, it could crack hard. If it bounces, it might bounce weakly. It'll be a short and a setup for, I think, 54.5 and then 46.7. New York Times tech trader swing short when it was trading in the 44 range has dropped down to 40.5, 41.5, sorry. And even though it bounced Friday, I'm looking for lower levels, targeting 39.5 at 35. Phillips Van Heusen broke down from the perfect bear coil. I think she drops down further, and 94 and 85 targets. Sentinel-1 came down from the bear flag. We went short. It's dropped from 24 to under 20. My target is 18 and 15. A new one we added, SAIC, last week, has dropped down, as you can see. And if it cracks this pattern, you might see 110 and maybe even 100. STX, also one we added because it's in that semiconductor group that seems to be topping. Look at the head and shoulder top and break through the resistance. We're trying to say support of this one. Any move under here, a breakthrough 79 3/4 could drop this down to 70 pretty quickly. Tenable looks like a top as well and a breakdown as well. I would look for something in the mid-30s. And finally, Zscaler, been a really ugly look to it. Broke the trend line and just been in a downtrend ever since without much bounce at all. I can see the stock getting to 155 and even as low as 130, 32 zone. That's it. An exhaustive look at the longs and shorts, the technicals, the indices, etc. Folks, please review this. I put a lot of work into these every weekend. I want you to be prepared for the trading week. I will talk to you soon. Have a great rest of your weekend. HP out.